Good afternoon, everyone, and welcome to the online public lecture on COVID-19 financial digitalization and Bitcoin cryptocurrencies, trends and outlook for markets, regulations, and policies. My name is Shaukat Ali Khan, and I am the Chief Information Officer here at the University of Central Asia. As we are all well aware that the COVID-19 response has accelerated the adoption of digital payments worldwide, driven by an increase in online and contactless payments. As part of this adoption, there has also been an increase in the acceptance of Bitcoin and cryptocurrencies by major multinational corporations. PayPal, MasterCard, and Visa are exploring and beginning to accept payments in Bitcoin. MicroStrategy and Tesla have invested in Bitcoin. In Europe, the European Central Bank is exploring the possibility of a digital euro. Today, our experts will talk about the trends in financial digitization, background, technology, and considerations for Bitcoin and cryptocurrencies. I am honored to introduce our speakers, Professor Dr. Jean-Pierre Auffret, President, International Academy of CIO, Japan, and George Mason University, Fairfax, Virginia, USA. Dr. Auffret is co-founder and current president of the International Academy of CIOs, an NGO headquartered in Tokyo, Japan, with the objectives of fostering the exchange and adoption of best practices for CIOs and the IT executive leadership. Dr. Auffret is also director for the Center for Assurance Research and Engineering in the Valgena School of Engineering, Director of Research Partnerships at the School of Business at George Mason University, and a visiting lecturer at Duke University Center for International Development. He earned a BS degree from Duke University, where he was an AB Duke Scholar, an MBA from the University of Virginia, and a PhD in physics from American University. Our second speaker is Jeffrey Matsuri, Counsel, Alliance Law Group, McLean, Virginia, United States of America. Jeffrey Matsuri's practice focuses on domestic and international legal and regulatory issues associated with the development, distribution, and use of technology. His work has involved a range of technologies with special emphasis on communications and computing, nanotechnology, artificial intelligence, aerospace, robotics, health and medical, and blockchain. He is a member of the Virginia Bar and the District of Columbia Bar, and earned degrees from Duke University, the Wharton School of at the University of Pennsylvania, and the University of Virginia School of Law. Mr. Matsuri is the author or co-author of several published books on law and technology topics, including Law of the Internet, Global Information Technology Law, and many others. During their presentations, if you have any question, then please write at the Q&A section so that we can ask the speakers. And also all the participants who are participating through social media, please put your comments in the comment bar so that we can take the questions and then ask the speakers. With those words, please welcome our first speaker, Professor Dr. Jean-Pierre Auffret.
Thank you very much, Dr. Aga Khan, and thank you all for joining today. Appreciate the opportunity and very nice to work with Dr. Aga Khan again. Our talk today is going to focus on financial digitization and some of the trends and initiatives worldwide, including a look. Jeff is going to focus on policy and what some of the.
Can you please just do the full screen of your presentation?
Yes.
Yeah, perfect.
So our talk today is going to be on financial digitization, the increasing pace of it, including through COVID-19, and a look at some of the policies and initiatives worldwide, both on cryptocurrencies, but also on central bank digital currencies. It's a very timely topic as many countries are becoming increasingly interested in digital currencies, partially catalyzed by COVID, but partially too by private sector innovation. With COVID, as everyone has seen, there's been an increasing emphasis on digital payments through two main areas. One has been the interest in contactless payments to lessen the risk of COVID and COVID transmission, but also with many countries or many regions undertaking lockdowns, payments from households and residences directly online. So a number of estimates on the increase in digital payments, but ranging up from 30 to 40% in many countries. This is a picture from Kenya, M-Pesa being one of the largest and most successful mobile payments platforms in Kenya and operated by the telecom operators Safaricom. And their payments too increased quite greatly during COVID. And in conjunction with the national government, the M-Pesa and Safaricom suspended the transaction charges on the payments. So countries that have current systems in place, whether they be private sector or public sector, have had somewhat of an advantage in this move towards digital payments during the course of COVID. A similar circumstance is that countries who have invested greatly in digital government over the last 20 years have had some advantages in combating COVID. So for example, Taiwan, who's invested greatly in digital government, was able quite early on to connect their border systems, passport and passport control, to the healthcare systems for contact tracing. So much literature in the news on digital payments and cryptocurrencies over the last several months. This is a cover page from the financial journal Barron's from several weeks ago, April 12th edition, on how there's an increasing number of companies who are beginning to look at cryptocurrencies, look at digital currencies, and become more involved with them. So as Dr. Ali Khan mentioned, Visa and MasterCard starting to accept payment in do transactions with cryptocurrencies, increasing number of ATMs worldwide transacting in digital currencies, and companies such as Tesla, who we'll talk about in a little bit, accepting cryptocurrencies or Bitcoin specifically as a form of payment. The cryptocurrency market now, or value, is about $2.1 trillion. So it's increased quite greatly over the last several years, with Bitcoin being about half of that. So a very large store of value. So cryptocurrency is one aspect of digital and digital payments, but there are many others. So financial institutions are looking at developing digital coins, quite different than cryptocurrency in a way. Cryptocurrency being based upon peer-to-peer computing with no central mediator. Here, this is something different. This is a blockchain-based system under the umbrella of a major international financial institution with the corresponding trust and regulation that they are under and have. Countries too, looking at central bank digital currencies. So similar to physical currency, which is backed by the a nation's central bank. These countries are looking at digital currencies with some differing motivations. So one motivation being the idea that it can lessen the transaction costs on cross-border exchange. Another motivation for some countries is that they're moving quite rapidly towards cashless societies such as Sweden, and the central bank looking to have a role and to maintain the trust and the sovereignty of their financial system. India too has moved fairly rapidly for demonetization over the last several years. Partially it's their international development agenda, where they've provided an Aadhaar number to every resident and citizen over the age of 5 as a way to foster financial inclusion. So building upon the Aadhaar numbers, India provided bank accounts to about 200 million rural poor. And this idea of a digital currency backed by the government is a way to, in the Indian government's view, further the ability to transact directly with citizens and residents. So one advantage the Indian government potentially saw was that if they had a digital currency during the COVID times, they would have been able to provide cash payments more directly to the residents and citizens quicker. Of course, there's great risk also with central bank digital currencies, and countries need to work out the ramifications for monetary policy, lending policy, and regulation. China has been in the vanguard of central bank digital currency, having trials in the last several years, and in fact doing research over the last 7. China is an interesting case because of the very large number of transactions that go through the private sector services of Alipay and WeChat Pay. So the China government, both looking to have a central role in relation to these types of companies. China also quite competitive in the international trade area, and over the years trying to actually move to for their currency to have the strength as a reserve currency. This is from the Atlantic Council, and you can see that the number of countries either doing research, pilots, or development on central bank digital currencies. So quite a large number. As you can see the pilots, Turkey, Saudi Arabia, Sweden, China, Cambodia has quite an active program. So really kind of interesting, and as with many things with technology, there's an experimental stage, but also too, there's this, for the development, there's both the technology capability, but also the legal and regulatory framework. And so the countries that do better have both, and countries are also at risk, as with digital government or blockchain or AI, of falling behind to the extent that they're not engaged. So it's a choice for countries, but there's opportunity and risk. With the cryptocurrencies, as with digital payments in general, there is a great risk of fraud, also concerns about money laundering and terrorism, as well as different types of cybercrime. So this was here in the US, different fraud schemes tied to COVID-19, oftentimes building upon someone's vulnerabilities. But I think too, not just a national policy regime and approach, but the international approaches and the coordination of these types of policies and laws will be increasingly important. A little bit of context. So the digital currencies and cryptocurrencies are quite evolutionary in some ways, but in other ways quite revolutionary. But some of the underlying concepts are similar for the currencies, as similar as well as distributed ledgers having similar concepts to blockchain. And so I wanted to review these for a short while and then pass it along to Jeff to discuss some of the policy implications and ramifications and initiatives. This is a city about 100 miles, 150 miles south of Baghdad. And they developed quite early on, about 3500 BC, a ledger system, well, a very early ledger system or system of accounts using tokens, which you can see here. And really kind of a fascinating theory by Dr. Matsuura, that these tokens were actually the genesis of writing and led to the cuneiform language in Mesopotamia. And so as a way of accounting and maintaining a ledger, these different shapes of tokens represented different farm products. So that the cone represented 1 unit of barley, the sphere, a larger unit of barley, and the cylinder was actually a representation of a sheep. And so as the cities urbanized, or as Mesopotamia became more urban, the number and types of these became much more varied as supply chains developed. So it wasn't one farmer or a group of farmers selling one thing. There's actually a supply chain and transactions. And the idea of owing funds, especially to the tax department, developed. And so these ended up being the unit of account or the ledger of account, and would be stored in an envelope. And then the idea developed that instead of having 3-dimensional figures to turn it into 2-dimensional writing, which became the cuneiform. So this idea of a ledger, which is what blockchain is and what the cryptocurrencies operate on, many of them, and also the idea of many of the central bank reserve digital currencies, developed further in early Renaissance in Venice and in Europe, partially because of the great deal of trading between Asia and Europe. This is the gentleman who wrote a book, a mathematics book, but in it described what some of the traders were doing, the Medici family and others, in Venice with double entry book counting. So keeping and maintaining a ledger of credit and debits. So again, this is all paper moving from the tokens, but on the path towards blockchain today. So instead of having a ledger on a piece of paper, you can have a database also. DBase was fairly long ago, but in the 70s and 80s, but an early database program for PCs. But now we have the very large distributed data centers. So instead of having a database or your ledger on one PC, can now have a ledger in the cloud or distributed that many people have access to. And so this ledger is a way of keeping accounts. A distributed ledger can be a way of keeping accounts and showing the units of value. One quick note, so money itself, in a way to consider whether or not Bitcoin is money, which is a topic of discussion and debate, is whether it's a unit of account, a store of value, and a means for conducting transactions. So this is a very nice graphic from the World Bank, and I think it highlights the differences and similarities between paper distributed ledgers, online distributed ledgers, and services such as Bitcoin, which are permissionless. So how many copies of the ledger are there? So you can have a ledger on your own computer maintained by one person, such as by a bank. Or there can be many copies of the ledger. And so then there's the question of access. And the follow-on question of who can actually change the ledger, and then who has responsibility for integrity and trust. So these are the types of questions. And so bottom right, Bitcoin in a way, quite revolutionary because it's done away with this, doesn't have this central intermediary, but many uses of blockchain and distributed ledgers, which are different and have a central group or central set of participants who are responsible for the integrity of it. So if we go back to the J.P. Morgan example of a digital coin, J.P. Morgan having the responsibility, or when Facebook was still looking into it, but looking to set up a digital currency, they were going to have a limited number of participants responsible for the trust and the consensus mechanism, as opposed to how Bitcoin operates. So another example of this blockchain in a much more closed system is the very large international shipping company, Maersk, container shipping company, working with IBM to set up this blockchain-based system, again, a distributed ledger, to streamline international trade from the exporter all the way to the importer through all these intervening steps where you have to have a transaction in an agreement on what the transaction is amongst multiple parties. So fascinating technology, but a very current area with the adoption, the increasing adoption of digital payments worldwide, partially catalyzed by COVID. The growing acceptance to some degree of Bitcoin and other cryptocurrencies by mainstream, very large multinationals. This interest by national governments to set up their own digital currencies, or at least research and explore what it means for their countries. And all these also within the context of this technology innovation of blockchain, which is being used not just in digital currency and digital payments, but in systems and applications such as this, or in pharmaceutical and pharmaceutical traceability, for example. So one note on the adoption by some of the larger mainstream companies. So Tesla has invested quite a large amount into Bitcoin, I think $1.5 billion. And so now it's possible, as you can see on the middle right, to actually pay for a Tesla automobile with Bitcoin. But it's really quite fascinating, the disclaimers that they have on it. So if you pay in Bitcoin and then decide that you're not going to accept the car for some reason, Tesla has this disclaimer that Bitcoin is volatile and that they can reimburse the person in either Bitcoin or dollars, and it's up to Tesla which, and that the car purchaser is taking this risk, the financial risk on the movement of Bitcoin. So really quite interesting. There's also one other ramification of paying in Bitcoin for a Tesla or for some other large dollar purchase. And Jeff will touch on this. In the U.S., at least, Bitcoin is considered an asset, and so liable to capital gains tax. So if someone utilizes Bitcoin for a large purchase, there's this capital gains tax ramification of cashing out of the Bitcoin and translating it into dollars. So I think a fascinating area. I think Asia is in the vanguard of a lot of it, especially because of the widespread adoption of smartphones and mobile phones. And Asia also quite varied from country to country as to the degree of adoption and how they're looking at regulation. So with that, I'll turn it back over to Dr. Aga Khan and to Jeff.
Thank you very much, Jeffy. It's very interesting. And now I would like to invite our second speaker, Jeffrey Matsuura, to share his thoughts on the topic.
Thank you. It's a pleasure to have the chance to talk to you today. JP's given us a very helpful and actually fascinating overview of the environment for cryptocurrencies, digital assets, and all sorts of other forms of electronic payments today. What I will try to do is to build on that, focusing on the legislation, regulation, and policies in different parts of the world that are both trying to influence and respond to essentially the developments and the evolution that JP has described. In 2015, I wrote a book called Digital Currency, an international legal and regulatory compliance guide. And while I was preparing that book, I was struck by a few things in this context of digital currencies, digital assets, digital payments of all sorts from a legal perspective. The first thing I was struck by was that the potential not only for cryptocurrencies, digital currencies, but also for the many different potential financial applications that were already emerging in 2015 based on use of the blockchain. But from a legal perspective, one of the things that fascinated me also was that legislatures, executives in government were, in different parts of the world, were focusing attention on the digital currency component of these platforms. What are the legal implications of digital currency widespread use? When I looked at the subject more deeply, it became pretty clear to me that actually the currency component from a legal perspective of these digital platforms and payment systems was actually probably the simplest from a perspective of compliance. That the more complicated legal and regulatory issues were associated with many of the other digital financial applications, digital assets in general, for example, management of them, creation, distribution, use. In the years that have passed since 2015, the situation stays very much the same, although the much more widespread adoption and far greater interest in these digital financial platforms and systems is astounding, actually. And yet, from a legal perspective, people still tend to focus on the legal implications associated with digital currency. And it continues to be, from my perspective, from a legal point of view, one of the simpler aspects of the digital systems. The digital currency, and by this I'm talking about real, legally recognized fiat currency, legal tender, the kind of currency that you can on demand transfer into tangible cash. The only parties who can issue that kind of fiat digital currency are governments or central banks empowered by governments. So from a legal perspective, the issue of how does one handle digital currency is pretty simple. Either your nation chooses to adopt it or it does not. And as of today, there are only a few countries that are experimenting with digital fiat currency, digital legal tender. And JP referenced several of them. There's another example of a country that actually went the route of adopting digital national legal tender currency, and that was Ecuador in 2014. And Ecuador at that time made the decision to establish national fiat currency in digital format. And it continued that experiment for about 4 years until 2018. In 2018, the national government in Ecuador decided, we're not getting the kind of adoption and use that we had hoped for and anticipated. So interestingly, Ecuador moved in the other direction and then said, we're going to eliminate the digital fiat currency and instead permit the development of private, diverse legal payment and value transfer systems. So as JP mentioned, there are countries are all basically trying to experiment with how they work on these digital payment platforms and systems, and it's not yet clear what will become the prevailing system. You have the China and Sweden, and in addition, I believe Canada are actively demoing digital currency systems and have created a legal environment that enables that. But you have the example of Ecuador, which in some ways has moved in the opposite direction, moving from a digital legal fiat currency back to kind of a more open system where there is not a fiat currency in digital format, but multiple digital payment platforms are permitted to operate. One of the key issues associated with, from a legal perspective, with digital financial systems and platforms is the question of what, from a legal point of view, what are these assets and what are these transactions? JP mentioned the example of Tesla and Bitcoin. And as he noted correctly, in the United States and in many other countries, Bitcoin is viewed as an asset. It's not currency, but it is an asset. And in the United States, there's an entire tax framework associated with assets. The Tesla example that JP raised, I think, actually is fascinating and important. As he noted, Tesla will accept Bitcoin as payment. You can buy a Tesla with that Bitcoin. But part of the reason for the disclaimers that JP showed us from Tesla is that there is, I think, a substantial amount of confusion about what it means to use a digital asset like Bitcoin in an actual transaction. In this case, the purchase of a product, a car. As JP noted, in the US, you have this capital asset, the Bitcoin, and you are now going to transfer it for something of value, the new car. In the United States, under US tax law, that is viewed as a capital gains transaction. You have converted a capital asset and you've profited from it. The capital asset is the Bitcoin. So you can imagine a scenario which, given the fact that currently Bitcoins are worth somewhere in the neighborhood of $55,000 or so. If you were an early miner of Bitcoin and you had, you didn't pay anything for that asset. You mined it originally in the early days, and you've held it for these years. Under U.S. tax law, your gain, your taxable capital gain, would be $55,000. So the good news is you bought a brand new Tesla. The bad news for you is that you owe the federal government capital gains tax based on a gain of $55,000. And not a lot of people yet are used to kind of thinking in that context. Different countries are all experimenting with what to do and how to treat digital assets. When you look at it from a legal perspective, I mean, we've seen one area that clearly comes into play, tax implications. Tax law has a significant and direct relationship with the use of digital assets, but it's broader than that. There's a whole range of laws and regulations that we don't often focus on, but we're going to have to start focusing on, that come into play as we create, sell, share, transfer digital assets. JP mentioned the concerns about money laundering, fraud, support of terrorism. Money laundering being the process where I take money that I earned illegally and I clean it, I launder it by running it through some type of legitimate transaction or investing it in some type of legitimate product. Commonly, in many instances, that product is real estate. I have ill-gotten gains and I buy real estate with it. And then the connection between my criminal activity and the value I extracted from it is obscured. Digital assets, like tangible physical assets, have the potential of running into are being used basically for money laundering and illegal conduct. There are a wide range of pretty much traditional legal issues. There are laws and regulations that are not directed towards digital platforms or transactions particularly, but they will come into play. Perhaps one of the most mundane examples, common examples, is estate laws, transfer of property, wills, trusts. Increasingly, as digital assets become more widely popular, they are going to appear and they are going to be addressed by those sets of laws. I own Bitcoin, I die, I have made provisions for my Bitcoin to be transferred to my heirs. No different than any other asset that I own. But it now means that an entirely different set of laws come into play. And when I do my trust and estate planning for what happens to my assets when I am gone, I need to include my digital assets in that. And the legal system that handles my estate has to understand and recognize those digital assets. In the United States, another area that is dealing increasingly with blockchain, digital transactions, digital assets, are the laws associated with securities, stocks, financial instruments, all of that. It's been discovered that the blockchain is potentially quite a useful system for issuing stock, for example, or other financial instruments. JP mentioned the increasing interest of major financial institutions in blockchain, digital assets, digital currency. This is why. But what has increasingly happened, for example, is that the Securities and Exchange Commission in the United States, the government agency that regulates stock trading transactions, is being asked to make decisions about, for example, is a blockchain an appropriate method for issuing and trading stock? In the United States, there's another regulatory authority, the Commodities Futures Trading Commission, and it is increasingly being called upon to look at issues such as oversight of trading exchanges for cryptocurrencies. So my point here is that even though we often focus on the laws and regulations associated with classic digital currency, actually those issues are not particularly complicated from a legal perspective. They are from a policy perspective as to whether or not a nation chooses to authorize legal fiat cryptocurrency. But far more complicated from a legal perspective, a compliance perspective, are the issues associated with how does one authorize or manage a wider range of digital assets beyond currency, and a wider range of electronic financial transactions beyond, again, currency. So what we're seeing as of right now is that if you look at most countries, to the extent that a country is establishing or clarifying laws and rules associated with these digital financial instruments, the approach they are generally taking is making it clear to their citizens that the cryptocurrencies are not legal tender currency, making it clear that the digital currencies and digital assets are highly volatile in value, and thus are potentially problematic with respect to fraud or consumer confusion. And they are applying their traditional anti-money laundering, anti-fraud, and tax laws to those assets. But most countries are taking a wait and see perspective. Some, however, are moving more aggressively. India, for example, is considering legislation that would be, I think, some of the most complex and anti-digital asset focus in the world, aggressively barring cryptocurrencies, severely limiting the potential use of digital assets. And although I don't know for sure, it may well be that that aggressive strategy, if it is in fact implemented in India, would be related to the point that JP made about India looking at potentially a much more expansive government-operated digital currency, digital asset, payment transaction platform, government-centered. And if it is to be government-centered, they may not want private systems to be developing in advance of that. But most countries, as of now, are taking a kind of a middle ground, and they are, from a legal perspective, they are making it clear that digital currencies are not being established. They're trying to protect their public from fraud. They're trying to derive the revenue that they can get from those assets through tax and other systems. But they are not stopping individuals from collecting digital assets, from transferring digital assets, and for using digital assets potentially as a transfer of value mechanism for like payment for goods and services. So I would close by simply saying that the amazing expansion of digital platforms for financial transactions, expanded acceptance of digital assets, and initiatives, at least in some countries, for digital currencies are moving rapidly and are affected by a wide range of categories of law and regulation. But the cryptocurrency piece of it, the digital currency piece of it, is not the most complex part of it when it comes to issues of legal compliance and regulatory oversight. And with that, I think I'll close, and I guess we could get to any questions that might have arisen.
Thank you, Jeffrey. Very interesting. I think it's a very interesting topic because it's evolving on a regular basis. So there is a lot of confusion, right? Recently, I was watching a program on HBO, Real Time, with Bill Maher, where he was giving all the arguments of the world to not trusting on Bitcoins, right? And cryptocurrencies. But at the same time, we also see Tesla investing in Bitcoins, and then it's actually opening more and more. And now MasterCard, Visa, and they are also exploring. So how do you see the evolution in next 3 to 5 years in this area?
I think that the interest and the demand will continue to expand dramatically, and the number and diversity of uses of these digital financial assets will increase. But as that happens, I think that will put increasing pressure on governments to make some decisions. I think right now, most governments are trying to kind of carry out their basic mission. They're trying to maintain a certain amount of financial stability to protect their publics, but trying not to overly interfere in the development of these new systems. Because I think governments also feel that there is the potential for those systems to be of significant value. So I think what will happen is that the demand and the interest and the uses will continue to expand and diversify, and that will force governments increasingly to make decisions. If for no other reason than the Bitcoin Tesla example is just a great one to me, because it showed to me how the demand, interest, and creativity associated with these payment systems and these assets really forces the governments often to do something, but that doing something doesn't necessarily mean creating new laws. It may mean that, okay, now we are seeing these kinds of transactions. What are the tax implications? And they're forced then to interpret. And that's what the Tesla case, if you looked at when that happened, when shortly after Tesla had agreed to accept Bitcoin payment, and the Bitcoin market value soared. And then recently, President Biden has indicated that, well, he may make some adjustments in the capital gains tax framework in the United States, particularly increasing the capital gains exposure for people who have a lot of capital assets that are making a lot of capital gains. You saw the Bitcoin market pull back substantially, as I think many people who held those assets were starting to rethink, wait a minute, what is my tax exposure here? But that's not new law. That's, you know, existing well-established law that's now coming into play.
Thank you, Jeffrey. I will take a couple of questions in the next 10 minutes. We are receiving a lot of questions on social media and also here. So I will just take 3 or 4 questions out of this. So I will ask actually Professor Auffret about this one. What do you think, is digital currency a currency of the future, or it might be replaced by something else? If so, how long it might be in use?
Well, I think there's this dynamic between the private cryptocurrencies, the non-government ones, such as Bitcoin, and the central bank digital currencies, or the potential for those. And so how the balance plays out, I think, is going to vary greatly around the world. I think that the central banks and national banks will ultimately play a very large role, but that these private peer-to-peer systems such as Bitcoin, as well as the coin systems from organizations like JP Morgan will still be a part of it. But there's many different views on it too. There's some who have the view that Bitcoin may well be the foundation of the financial system of the future as a store of value, and that these government digital currencies would be the means for transacting. So there are a range of views. I think the motivations, at least for IMF, or many from the leadership at IMF and European Commission and European Union, is that technology and digital is leading to a change in how transactions are made, how people make payments, what their views are on convenience and security and safety, and that the governments have a very large role, both as trying to foster and continue to foster trust, but also as being responsible for the sovereignty of the currency and for the monetary policy. So there are international competitive aspects to it. So, for example, the European Union not wanting to be beholden to multinational technology companies such as a Facebook, or to be beholden to a non-European Union country's digital currency. So that this idea of sovereignty is very important for almost all countries.
Thank you, Professor Auffret. Another question to you, and then I will go back to Jeffrey again. Another question is: a lot of people are investing in cryptocurrency in order to double their money, since it drops and rises dramatically in comparison to regular currencies. What is your opinion regarding the use of cryptocurrencies in the way of improving finance?
Thank you. I was reading the question and I wasn't quite sure on what the author of the question meant by improving finance. I think in regard to individuals and investing in cryptocurrency, I think everyone needs to decide for themselves to what degree the cryptocurrencies are speculative and to what degrees they actually are a store of value. Obviously, they've gone up tremendously over the years, but I think everyone needs to decide that for themselves, and they also need to decide what role or what part of the portfolio the cryptocurrencies would be. But I do think to some degree they are speculative. To some degree too, there's a point of view that Bitcoin is almost has a similar not role, but dynamic as gold. So everyone needs to decide that for themselves also.
Thank you, Professor. I think we will take the last question, and I would like to ask this to Jeffrey. What are the major challenges to lawmakers and policymakers in making use of blockchain, digital currency, and what solutions which have towards these end. What is the digital currency likelihood from competition angle? Gain or losses to countries, private investors, and individuals?
I think the digital currencies and digital assets in general are very complicated for governments. On the one hand, they are becoming increasingly popular and widely used, and their uses are diversifying. On the other hand, it's kind of like a moving target for a policymaker. The uses, the perceived value, the interest, it continues to change so fast that it's pretty difficult to make effective policy in that kind of environment. So I think they pose a very big challenge to policymakers. I think one important thing to keep in mind, though, and I tried to touch on this in my talk, is that oftentimes policymakers think, I believe, that they have to go out and decide, oh, how do we regulate this new thing or this new activity? I kind of think that there are so many laws and regulations already in place that you can almost let these new systems, technologies, platforms, transactions come to you as a policymaker, and you address them. Again, the tax people say, "Oh, that's very nice that you have Bitcoin," but hey, we look at it and it's a capital asset subject to existing taxes. So one advantage I think that policymakers actually have, even though I'm not sure they always appreciate it, is that they can use this wide range of existing laws and regulations and apply them as these digital systems raise new contexts. And the last thing I would say on that is I think policymakers should also keep in mind that there are a lot of potentially helpful uses, for example, of the blockchain in what has traditionally been kind of legal settings. For example, the one I think of is real estate, property, land, titles, management. I mean, there is increasing activity trying to find ways that blockchain can actually be used to help governments undertake activities that they are undertaking right now and do them more efficiently, effectively, and securely. So these technologies shouldn't be looked at by policymakers as only threats that they somehow have to deal with, but they should also be looked at potentially as instruments that can help governments operate better.
Thank you, Jeffrey, and thank you, Professor Auffret, for your time and excellent talk. I think it's a very interesting topic, and then this discussion will continue over the years to come. I think, and many people are interested, as you can see, that we are getting also a lot of questions. But due to the time constraint, we have to stop here. Thank you very much, both of you, for your time and excellent talk. And I would like to thank all the participants who have joined us here on Zoom and also on social media. We have recorded this lecture and it will be available on our University of Central Asia's YouTube channel in a couple of days. So thank you very much and have a very nice day. Stay safe. Bye-bye.